MBA in India tuition fees have exploded in recent years. In 2007, an IIM MBA cost just 4 lakhs and today it is 27 lakhs, a 575% spike. So, is it still worth it? The answer is yes. And the CAT in 2024, 3.29 lakhs registration is the live proof of that. An investment of around 30 lakhs is rewarding students with promising career. However, such a big amount is a concern for the students, and that's where education loans come in, acting as a saver for students. You can't just ask for people and arrange in the money. But what if you can? Well, you just need to know who to ask. And that's exactly why this video is about. I'll reveal the right education loan lenders and the key factors to consider when choosing a loan that perfectly aligns with your profile. An MBA from a top institution can open doors to high-paying jobs and long-term career growth. But the money is the main issue. The cost may fluctuate depending on the college's reputation, location, and program type. On average, an MBA in India costs anywhere between 7.5 lakh to 25 lakh per year, covering tuition, accommodation, books, and living expenses. Thus, before we start discussing the best lenders for MBA loans, let's take a look on how much top B schools charge for their programs. IIM Ahmedabad and IIM Bangalore have tuition fees of around 25 to 26 lakh, while XLRI Jamshedpur is even higher at 30 lakhs. On the other hand, FMS Delhi stands out as an outlier, offering an MBA for just 2 lakh. Quite a contrast, right? While the cost may seem high, the return on investment makes an MBA worth the investment. So, while I am talking about funding, you can consider two types of education loans for MBA programs in India. First, secured loans. In this loan type, you are pledged a collateral like a property, FD, and government bonds as security. They offer lower interest rates and higher loan amounts. Second, unsecured loans. In this loan type, you don't need collateral and it comes with higher interest rates and stricter eligibility criteria. So, which loan type fits you? This depends on financial background. However, knowing the best available options for MBA education loans in India might help you choose the better loan type. Public sector bank provides secured loans and provides collateral-free education loans to top universities. The most known name, SBI, provides education loan of up to 50 lakhs at an 8.15 to 8.90% interest rates. UBI provides loan amounts of 35 lakhs at 8 to 8.25% interest rates for MBA. If you're not eligible for a public banks, you can explore private banks. For instance, Axis Bank provides loan amounts of 75 lakhs to a 13.7% interest rate. But ICICI Bank offers loans up to 1 crore and interest rates starting at 12%. Both public and private banks require margin money, meaning you'll need to invest 2% of the loan amount from your pocket. This is where NBFCs come in. They cover 100% of your study costs without requiring margin money. Click on the I button in the right corner to learn about education loan terms. The top name among the NBFCs is Credila. They provide unsecured loans of up to 28 lakhs at an interest rate starting at 6.07% onwards. On the other hand, Avance covers 100% cost of the study and interest rates start at 10%. Many students receive loan approvals from multiple lenders, which can make choosing the right one confusing. If you're in this situation, here are some key factors to consider before finalizing education loan. The first factor to consider is the interest rate. The lower is the better. This means that your overall cost on the education loan will decrease in the long run. The second factor is the processing fee and approval time. While a lower interest rate is the primary factor, don't ignore the processing fee, as some lenders like NBFCs charge significantly higher fees. Public banks, on the other hand, have longer processing times. The third factor is margin money, the amount you'll need to contribute from your pocket. NBFCs typically have 0% margin money, while public and private banks usually require 10%. The fourth factor is the moratorium period. Most lenders offer a moratorium, meaning you don't have to make repayments while studying, plus an additional 6 months after graduation before EMIs begin. The fifth factor is tax benefits. Since an MBA leads to high salary packages, you will likely fall into the income tax slab. Choose a lender that offers Section 80E tax benefits, allowing you to claim tax deductions on the interest payments for up to 8 years. The sixth factor is loan tenure. While it may not seem important during the loan application, your repayment duration affects your EMI amounts and financial stability after graduation. The seventh factor is covered expenses. Not all lenders cover the entire cost of the study, so always clarify what expenses are included, such as tuition, accommodation, books, travel, and miscellaneous costs. The eighth factor is repayment terms and conditions. Carefully read the repayment policies to avoid unexpected financial burdens later. To qualify for an education loan for your MBA, most important lenders require a minimum 60% GPA is required for graduation. Co-applicant credit score should be above 700. For MBA programs, some lenders might limit applicants to under 35 years of age. What documents to prepare for an education loan? You require 1. Educational documents from the 10th standard up to the latest qualification. 2nd, identification proof such as PAN card, Aadhaar card, passport, or voter ID card. 3rd, various acceptable proofs of residence including electricity bills, ration cards, Aadhaar cards, bank passbooks, or voter ID cards. 4th, 6 months bank statements and income tax returns from the co-applicants. It's time to apply for an education loan. The process involves multiple steps. First, you need to research and compare loan options based on the interest rates, repayment terms, and eligibility criteria. Once you have shortlisted the best lenders, gather the necessary documents, including your acceptance letter, academic records, identity proof, and financial statements. Next, submit your application. Most banks and NBFCs offer digital application options for a smoother process. Once submitted, the lender will review your creditworthiness before approving your loan. After the approval, the funds are disbursed directly to your institution. As we are already talking about the MBA and its ROI, have you considered an MBA abroad? Yeah, I get it. MBA abroad is more costly than an MBA in India. In India, it costs between 7 to 45 lakhs, while an international MBA can range from 25 to 80 lakhs, including tuition, living expenses, and visa fees. But as the investment amount increases, the ROI increases as well. Top Indian B schools offer an average salary of Rs 12 to 25 LPA, while the global B schools like Harvard or INSEAD can provide salaries ranging from 70 LPA to 1.3 crore per year. MBA Abroad also provides more exposure and global opportunities. If you're considering an MBA abroad, Gyandhan can help you with the loan process, from eligibility checks to lender selection and negotiating better interest rates. Click the check eligibility in the link in the description and let us handle the loan process for you. If this video helped you understand your MBA loan options, hit the like, share, and subscribe button. We have got more study related insights coming your way. So stay tuned. Until then, take care and see you in the next video.